Hi, I'm Mike Meehan, a strategist in Nuveen's Portfolio Strategy Group. When it comes to markets and elections, we think popular narratives have it backwards. Election results don't impact the economy as much as the economy impacts the election. Does frustration with our recent inflation experience favor Vice President Harris or former President Trump? It will be a fascinating political experiment. But of course, we can't predict the election results, and you shouldn't believe anyone who tells you they can. If politics matter to markets, it's because of what clues it gives us about coming policy changes. Understanding which policies may be at issue, how they may affect your portfolio, empowers you to plan for those possibilities, and for that reason, our focus is not on party and politics, but on planning and policy.
Hi, I'm Jim Bergeron, specialist with Nuveen's Advisor Education Team. Taxes are always important, but in this election cycle, we see a greater emphasis on tax policy, partially because of an expiring debt ceiling agreement, and a large slate of tax provisions from the 2017 Tax Cut and Jobs Act that are set to expire at the end of 2025. Among other changes, the tax cut of 2017 generously lowered individual tax rates on income and earnings, almost doubled the standard deduction levels, significantly raised the AMT exemption and the exemption phase-out thresholds, and nearly doubled the estate transfer tax exemption.
When we think about tax policy, the President has an important role, but so does Congress. There are 33 Senate seats that will be decided in 2024, and in the House, all 435 seats will be decided. No one knows the outcome across any of the three, President, Senate, or House, but across all those essentially coin flips, it is unlikely they all come up heads. That would mean divided government, which we've had 64% of the time since 1950.
With a divided government, we could see policy that delivers higher individual tax rates for some. We'd expect to see lower standard deductions and higher deductions on state and local level taxes. Could see lower alternative minimum tax thresholds, greatly increasing the number of individuals who will pay this tax. Could also see lower estate tax exemptions and higher estate tax rates. So amid this uncertainty about policy, what can you do today? There are several steps you can take to prepare for these potential policy changes. If you feel that it is more likely that your tax rates are going up in the near future, you may want to take advantage of this by accelerating some income. For example, considering laddered Roth conversions provide greater long-term benefits. While the conversion tax cost needs to be taken into account, this year and next may provide an opportunity to transition tax-deferred savings into tax-free savings. Income is one part of the tax calculation. The other main factor is and are your tax deductions. A strategy that may be beneficial involves grouping or bunching your itemized deductions. You may want to consider prepaying state income or property taxes to the extent that you can. Likewise, you might want to consider making multiple years' worth of charitable donations in a single year. If you're retired, you might consider shifting your required minimum distributions into a direct charitable donation. Barring legislative change next year, the lifetime gift and estate tax transfer exemption, the amount you can pass free of transfer tax, is scheduled to drop significantly. Using the lifetime estate and gift transfer exemption is a use it or lose it proposition. This means that if you do not or have not used the difference between what the exemption will be in 2025, approximately $13.9 million, and what it drops to in 2026, likely between $6.5 and $7 million, that amount will be lost. Your wealth levels will dictate the most appropriate strategy to utilize, and as a result, you may want to start the conversations sooner rather than later. The time to consider these actions is now, in advance of election outcomes. You'll want to understand the policies and proposals and the various implications for you and for your portfolio.